at the current juncture, where should long-term investors put their money to work? Let's discuss that with Mehrbun Irani. He represents Nirmal Bang Securities. Mehrbun, good to have you back on ET Now. Thank you for joining us. What do you make of Tuesday's price action? What looked like a perfect morning, the afternoon was more like a disaster.
Yeah, Nikunj, I think honestly the correction which we witnessed yesterday, which we are not seeing in terms of the frontline indices, but if you look at the market breadth, if you look at the way some stocks fell, especially in the mid caps, the correction I would say was a little bit sharp. But honestly, I was expecting it. And if you ask me what happens now, I think I'm not changing my view. I continue to remain the same Mehrbun who was saying that we are going to go and see 6,000, 6,100, 6,200. This could happen. But we need to understand, Nikunj, that after being on the sidelines and people feeling left out, over the last few days, a lot of positions are getting built up on the long side, and this is happening with borrowed money. Number one. Number two is, if God forbid, we have a red flag coming from the US in terms of problems between the Republicans and Democrats, which ultimately, hopefully, we will find a solution. But as of now, if you ask anybody in the markets, Indian markets, they are saying a solution will come to the fiscal cliff. So in short, a sense of complacency has developed in India. Everybody on the street now is talking of 6,000, 6,100, 6,200 coming. People are just thinking of going long in the markets, and we need to accept the fact that we have gone up. So if we have a problem somewhere in Parliament, some more proposals of the government, if they don't go through, like what we are seeing, possible problems over the last 2 days because of this Walmart issue, banking regulation is not getting passed, something happened on the insurance front, things don't happen the way market has started assuming it will happen, post the FTA and retail coming. So I think there could be a small mishap. We could correct, we could consolidate, we could fall. Whatever term an analyst wants to use, he can use it. But therefore, I would prefer to be on the sidelines. We need to respect the market and accept the fact that we have gone up a little bit too sharply. So I would say India right now is a market, and I'm talking from the trading angle. India is a market where I personally feel one should be buying on declines. We should be going up, we will certainly go up. I'm quite confident and optimistic about that, I would say at the same time. Because I am quite confident that the politicians, despite the change in color, caste, creed, they ultimately have the same spirit in them. But at the end of it all, I think they are more proactive. I'm talking of politicians in the US. And I feel a resolution for the fiscal cliff will come. Somewhere as we go into January, you and I will be discussing as to whether the budget which is going to come in February will be good for the markets. And considering the two of the best brains as far as the finance goes, and two of the most popular ex-finance ministers, and one of them is the present finance minister, as far as the stock market goes, Mr. Dr. Manmohan Singh and Chidambaram, are going to put their hands on the budget. I think we'll remain hopeful. We'll also remain hopeful about RBI coming out and cutting interest rates. So I think the markets will have its own positive triggers going ahead. So I remain upbeat. I remain positive that we are going to see higher levels, though in the very short term, a small correction, consolidation, fall, honestly is not ruled out because of a red flag from the US, a delay in the fiscal cliff solution, or possibly some more problems in the parliament going ahead, and some reforms not coming through in this session.
You know, Mehrbun, I've always maintained that it is all about expectation management. So let me just quote a line from Aditya Narayan, who's head of Citi Securities or Citibank Securities, and let me just quote a line from his strategy report, and the quote is, "The mood suggests that the festive cheer for India has set in. There is a bullish buzz about India. Market expectations are almost as bright as Christmas lights, and India is on people's mind. There has never been such a cheer for India before in last 5 years." Mehrbun? Expectations are high.
Well, distinctly possible. I think I said the same thing, that people have started looking at India. But only thing, Nikunj, is, while not changing my view at all, I'm saying we're going to see higher levels. Is it the beginning of a bull market? Honestly, I won't like to comment on it at the moment. We will see higher levels. I'm just talking of a possible short-term, maybe 2, 3, 4, 5, 6 trading sessions, correction, fall coming for any of the reasons. The problem is, the voices which are sounding very positive right now have come over the last few days. Till about 10, 15 days ago, people were skeptical. People were not knowing whether FDI and retail will go through, reforms will go through. People were skeptical and the markets were going up, and I know a whole lot of people who are feeling stupid and feeling left out. But positions have started getting built in, and there is a sense of complacency which has come, and this complacency honestly is worrying, but only from the very short-term angle. I'm quite consistent with my view that we are going to see higher levels. As I mentioned earlier, As you rightly said, Nikunj, expectations will continue to keep the markets on a very positive note, and those expectations will come from the RBI, those expectations come from the union budget, those expectations will come from the fact that September quarter results were not all that bad. In fact, they were much better than what market expectations were, and possibly earnings have possibly bottomed out. Those will improve December quarter. So I think those expectations could continue to drive out the markets, and we possibly could move up at least 3, 4, 5, 6% up from here. So whether we'll see 6,200, 6,300, and if you ask me, will we see that? My answer is yes. Will we possibly see a new high also in the next 2-3 months? Honestly, I'm not ruling it out. So I remain positive on the markets, but this is also to state that we will have to continuously monitor the situation, because whether this positive stance of mine or of anybody else, is it meant for a long-term investor to just go buy blindfolded, buy for the next 2-3 years? I don't think I would like to come to that conclusion right now. I think it's a little bit premature. Whether we are entering into a new bull market, honestly, I don't want to belong to that camp which would like to conclude at this moment.
KR IPO closed yesterday, PC Jewellers IPO closes today, Bharti Infratel IPO opened yesterday, and NMDC FPO will open later in the day. So from the primary market, anything which is looking exciting?
CARE was definitely good, I think, more because of the fact that the two other companies listed in the space, rating companies, CRISIL and ICRA, rated quite highly with the market. And people were saying it's discounted, quite attractive compared to the past earnings, and very attractive compared to the ICRA and CRISIL. All said and done, I think that was the main reason. Coming back to Bharti, I think we will really need to wait and watch as to what the response is going to be. First day was nothing encouraging, not at all encouraging, I would say. I think valuation-wise a little bit high. Point two is business honesty, very difficult to understand. Coming to your question on NMDC and NTPC, I think NTPC is, I think, sometime in January. NMDC, according to me, looks very, very, very attractive. I think compared to the valuations of the manganese ore and coal India and even GMDC, very attractive. Another reason in favor of NMDC, I would say,
very, very, very attractive. It's in commodity stock. Who wants to buy commodity stocks right now?
I would say that every analyst in this country, I would say every research house in this country, every brokerage house is negative. In fact, this is a sector which everybody loves to hate at the moment. But going ahead over the next 2 years, I think if you look at the expansion happening in this particular company, the balance sheet is very clean. There is decent cash in the books. Valuation-wise attractive. As I mentioned earlier, it's very cheap as compared to manganese ore, coal India and GMDC, though expensive as compared to Sesagua. But then Sesagua has got its own concerns right now. So I would say, because the balance sheet is clean, there's cash in the books, valuation-wise attractive. The stock may do nothing much in the short run, and there will be an overhang of divestment happening of 10%. But if you look at things the other way, Nikunj, I think going ahead things could improve. Point two is the liquidity in the counter will improve, because if you look at the government holding today and post the divestment is going to be 80%, liquidity in the counter will improve. That could attract some bigger houses or bigger investors to possibly look at the stock, only because the stock is attractive and cheap right now. This is not to state that I'm seeing a very lovely appreciation coming in the next 1 to 3 months. This is not an IPO which people go and buy into expecting listing gains. So not from that angle, but from the sheer fact that, okay, fine, at 155 I didn't look at the stock. But at this present level, when the government is offering it to me at a discount, possibly should I buy it from the next 2-3 years angle? My answer would be yes.